Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. Citing strong economic growth, Finance Chief Diokno hopes that the government's debt-to-GDP ratio will drop to around 50% in 6 years' time. That's from the current level of more than 63%.
The national government's budget deficit balloons to nearly 100 billion pesos in October.
Protests erupt across China as citizens push back on stringent zero measures.
And oil companies are expected to implement a big-time rollback this week. Let's begin our broadcast with Finance Chief Diokno expecting the country's debt-to-GDP ratio to decline to about 50% by 2028. Diokno says the government could reach this level if economic growth is sustained. He also says that while debt may increase, the economy's ability to pay also increases due to gains and investments, including where the debt is issued for. Now, pre-pandemic, the country's debt-to-GDP ratio stood at 63.7%, the highest in 17 years. This remains above the 60% threshold considered manageable by global lenders for the developing economies. But Diokno gave an assurance that as long as the economy grows at a faster pace than the growth of the public debt, then the debt level becomes sustainable.
The National Economic and Development Authority sees the economy likely growing by at least 7% this year. NEDA shared its outlook amid talks of the domestic economy slowing down along with global growth. In a tweet, Socioeconomic Planning Secretary Arsenio Balisacan said that after a likely GDP growth of over 7% in 2022, the country may see a slowdown in 2023. Balisacan attributed the possible slowdown to external headwinds and internal challenges. However, NEDA assures that the economy will remain comparatively strong in 2023. Multilateral lenders such as the IMF and the ADB have projected slower economic growth next year. This is due to global shocks as well as high inflation and interest rate hikes that are seen to dampen demand. Meanwhile, Balisacan earlier said the country is on track to meet the government's target of 6.5 to 7.5% growth for 2022. That's after posting a 7.6% growth in the third quarter. Balisacan says the country just needs to grow by 3.3 to 6.9% in the last quarter to hit its target. The national government's budget deficit ballooned to 99.1 billion pesos in October as state spending outpaced revenue collections. The Treasury reports that the October budget gap rose by over 54% from the 64.3 billion peso deficit in the same month last year. But month-on-month, the October deficit sharply narrowed from September's 179.8 billion pesos. Government expenditures, meanwhile, rose by 22% year-on-year to almost 388 billion pesos, while total revenue collection increased by 14% to 288 billion pesos. The Treasury said faster government spending was driven by higher tax allotments of local governments as well as subsidy releases for programs implemented by government corporations. Social protection programs of the Social Welfare Department and road infrastructure projects of the Public Works Department also contributed to the higher October spending. RCBC Chief Economist Mike Ricafort said higher expenditures for the month was due to soaring inflation and rising borrowing costs.
Public anger against stringent COVID-19 lockdowns erupted into rare protests in China. Protests sparked following the Urumqi fire, which killed at least 10 people at a high-rise building on Thursday, sparking questions on whether the partial lockdown prevented residents from escaping on time. The fire has fueled a wave of civil disobedience unprecedented in mainland China since its leader Xi Jinping assumed power a decade ago. Over in Beijing, two groups of demonstrators totaling to at least 1,000 people gathered along the Chinese capital's Third Ring Road early Monday, refusing to disperse. Meanwhile, protesters in Shanghai called for Xi Jinping to step down during a candlelight vigil held over the weekend for the victims of the Urumqi fire. Police eventually detained some protesters in Shanghai on Sunday, with a Reuters witness even seeing people escorting them into a bus, which was later driven away through the crowd with a few dozen people on board.
All right, back to some domestic news. Well, we're just days away from the last month of the year, Dan, and with that, time is ticking as well for BPO firms to transfer their registration from the Philippine Economic Zone Authority to the Board of Investments. That's if they want to extend the hybrid work arrangements. For updates, we have Jack Madrid, President of the Information Technology and Business Process Association of the Philippines, or IBPAP. Jack, good day. Thank you for joining us.
Thank you very much, Jess and Danny. Always good to be in your show.
Okay, so first, updates on the transfer of IT-BPM projects to the BOI. I mean, you have 160 firms, I believe, intending to make that transfer. But so far, at least the last update that we had, only 55 are being processed. What's the update on that, and will the deadline be met?
That's a good question, Jess. As of last night, our update from PEZA is that a total of 254 registered business enterprises have applied for this so-called paper transfer. And out of this 243, over 60% have already been endorsed to the Board of Investments. That's about 150 out of the 243. So that's we expect this pace of applications and endorsements to accelerate in the coming days, because our partners in PEZA have given this internal deadline of December 16th for RBEs to express their application for this paper transfer.
But there has been a commitment, at least from the BOI, to fast track all the processing of the documents here for that transfer. And at the same time, what happens if you fail to meet the deadline? Are you looking at least for a possible extension of the deadline here? And also, can you give us an idea how many firms opted not to make that transfer as well?
Well, it's we have another 2.5 weeks to go, Jess. I would expect, that number to be much higher in the days to come. I know that PEZA is working very hard to process and endorse these applications. On the part of the Board of Investments, I think once they get the endorsement of the PEZA, I think that the effectivity of this paper transfer should be should already be pretty much immediate once they receive the endorsement. The BOI deadline is actually the end of the year, but the reason why PEZA and IBPAP have been encouraging our RBEs to submit by December 16th is to allow our partners in PEZA to process and endorse the applications before the deadline.
Let's go back to the root of the issue here, which is, we were trying to protect our workers as well due to the health issues. It was more convenient for them to be working from home. Have these trends changed, especially since the health situation has markedly improved, the mask wearing as well as social distancing protocols? What is the sentiment right now? Is there a motivation for IBPAP to encourage its employees to start working on site, or has this really changed?
IBPAP's position is really to listen to the voice of the employees. In fact, it's the Filipino talent that has gotten our industry to be the major economic pillar that it is today. And I think investors also expect that, the employers who have moved their operations to the Philippines expect that we give this focus to the employees, and the pandemic has taught us many lessons. First and foremost of which is the world of work and the way we work. It's all about flexibility, and I think to encourage the growth of the industry and to deliver the promise of 1 million jobs in the next 6 years, we will need, along with our partners in government, to show that kind of willingness to give our employees the flexibility that they need and the investors what they expect.
But Jack, you're very, very close to the property industry as well, which has suffered vacancy rates due to, of course, people working, off-site. How are you assisting them in terms of the impact on office space demand, and what's the best case scenario here to balance these two interests?
That's a great question, Danie. We do have regular dialogue with the real estate players of the country, the developers, and the conglomerates. Obviously, there is some short-term concern on leases not being renewed. But our partners in real estate recognize that the IT-BPM industry is the single biggest user of office space. And in the past years, whatever vacancies have occurred have not really been from our industry. The majority of our investors, have maintained their centers where they are. They have pretty much renewed. Majority of the leases have been renewed, but with this trend towards remote work and the hybrid that is now being allowed through the process of the PEZA BOI transfer, obviously there can be some short-term decisions and effects of investors being more purposeful in their real estate decisions, maybe adjusting their footprint. But the growth prospects of the industry are the main thing here to consider. Every week, my team and I receive inquiries from both existing investors and new investors. There seems to be no let up in the interest of investors to grow their offshoring operations in our country. And I think while there might be some short-term effect, I think the medium and long term is extremely bright, and we will continue to need more office space, not just here in Metro Manila, but as I've said in previous interviews, this IT-BPM growth will be nationwide and across our entire countryside. In fact, out of the 1 million jobs that we hope will materialize, 54% of that will be outside Metro Manila.
Now, speaking of which, what is the long-term hope here? I mean, you have the likes of PEZA Director General Panga saying that, he wants this to actually just be an interim measure, this transfer from PEZA to BOI, in order for you to at least preserve your export enterprise status. So are you on the same page on that front? And how, if that's the case, how do you at least plan to institutionalize this?
Well, we believe that all investment promotion agencies should have uniform incentives, which they do. And I believe they should all be given the leeway to operate on a level playing field. And I think each of the IPAs in our country have their own unique value-added services. And, I think that PEZA has a long historical track record of opening the gates to IT investors since they started doing this in 2000. And I think, the one-stop shop suite of services that they provide our investors are not really being offered by any other IPAs at this time. And I think we should give credit to that. And let me cite an example. When new investors come, they, aside from fiscal incentives, they are also looking for support in terms of building and occupancy permits, the automated processing of export declarations and import permits. These have been done by the PEZA team since the outset of this IT wave. And I think these are services that our investors consider very important. And I think that the familiarity of the PEZA team in servicing the needs of our investors have become world famous.
Okay. And finally, we are approaching the end of the year. Give us the balance sheet in terms of revenues, employments, whether you met your targets for the year, compared, of course, to last year and pre-pandemic.
Well, I'm happy to say, Danie, that we remain very much on the same trajectory as 2021. We expect to end the year with a total of 1.56 million Filipino employees, which really bodes well for 2023 and beyond. Happy to also say that our revenue contribution to the Philippine economy is probably going to be in the vicinity of $32 billion US dollars, well on track to surpassing our 8% contribution to the country's GDP. And so I think we will solidify our role as an indispensable economic pillar in the years ahead. But there will be challenges, and I want to highlight that first and foremost will be the availability of employable talent that we will need. So we are working hard with our partners in government, DepEd, CHED, TESDA, to upskill our existing workforce and to also build long-term foundation with early stage interventions to improve and strengthen our curriculum so that we can compete more effectively with the emerging IT-BPM locations.
All right, so industry is strong there and we need more talent, upskilling, of course, and retention. Happy employees, given the difficult situations as well here. Thank you so much, IBPAP President Jack Madrid, for those updates.
Thank you. Always a pleasure to be with you guys.
Thank you, sir. Now let's pause for a quick break, but coming right up after that. President Bongbong Marcos hopes that the Court of Appeals will reconsider its decision temporarily halting the supply agreement between Meralco and a unit of SMC Global Power.
More of that and other stories when Businessworld Live returns. Stay with us.
You're still watching Businessworld Live here on One News. I'm Jess De Los Santos.
And I'm Danie, Laurel.
Heads up, motorist oil companies are expected to implement a big-time rollback on fuel prices this week. A forecast by Uni Oil sees prices of diesel going down by 3 pesos and 80 centavos to 4 pesos per liter. This would mark the 6th straight week of rollbacks on diesel prices. Gasoline, meanwhile, may see a decrease of up to 1 peso and 20 centavos.
President Marcos is hoping the Court of Appeals will reconsider its decision to temporarily suspend the implementation of a power supply agreement between Meralco and an SMC Global Power Holdings subsidiary. The Court of Appeals granted the temporary restraining order sought by SMC Global Power to halt the implementation of its Unit South Premier Power's PSA with Meralco. The TRO will be effective for 60 days. President Marcos described the CA's decision as unfortunate. Marcos is hoping that the CA will reconsider its decision, warning that this may result in higher power rates. Meralco Chairman Manny V. Pangilinan said the power distributor will now seek guidance from the Energy Regulatory Commission regarding the next steps.
The Trade Department says a proposed extension to the Comprehensive Automotive Resurgence Strategy, or CARS, is currently being discussed. According to Trade Undersecretary and Board of Investments Managing Head Seferino Rodolfo, Toyota Motors Philippines and Mitsubishi Motors Philippines are still finalizing their proposals for an extension. The CARS program provides incentives for manufacturers willing to assemble mass-market cars domestically. Rodolfo says there are ongoing discussions to add more models into the program as a possible stipulation in exchange for an extension of up to 3 years. However, the Trade Department clarified that there would be no additional funding for the CARS program even if an extension is agreed. Since September 2021, Meta has seen a 75% drop in its market value. At the heart of the downward spiral is Mark Zuckerberg's venture into the metaverse. How that affected investors' confidence, Alex Webb explains in this Bloomberg Quick Take.
Mark Zuckerberg is in the fight of his life. Meta, the parent company of Facebook, Instagram, and WhatsApp, has lost 3/4 of its market value since September 2021. It's facing a bunch of issues. The economy is hurting the advertising market, where it makes 98% of its money. Apple is meanwhile making it harder to make money from mobile advertising, and TikTok is hoovering up the young users that advertisers so love. The pivot to the metaverse, as the company likes to call augmented and virtual reality, was supposed to be the solution to Zuck's problems, but so far it's only accentuating them. Investors aren't happy at the tens of billions of dollars that the company is spending on unproven tech. The challenge is Apple, which may have a significant advantage over Zuck and co. To make any hardware platform appealing, you need to have lots of amazing apps. Take the iPhone, whose sales only went stratospheric after 2011 when the App Store was introduced. And to have amazing apps, you need to have lots of developers. Apple has, by its own reckoning, more than 30 million registered developers, and it's been giving them the tools and encouraging them to build augmented reality apps since 2017. That's laid the groundwork for any AR device it might ultimately release. There's a counter-narrative, of course. Apple might show why the metaverse is awesome and Meta will benefit from that. But the key thing is that investors just don't know for sure, and that uncertainty means they're punishing the share price.
Let's see, baka birth pains pa lang.
Where's your avatar dyan?
Those are the biggest stories in the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us.
And you're still watching Businessworld live here on One News. Now, Dan, a shaky start to the trading week. What, of course, with the protests here in China, the biggest since Tiananmen. How's that spilling over to our local equities?
I mean, you could see a sea of red here, Jess. A lot of shakiness on the ground. I think save for two, which is Australia, which seem to be closed right now. You can see, the Hang Seng down by 4%. In just a couple of hours of trade. And like you mentioned, a lot of outflows from emerging markets. The yuan was sold off over the weekend. The dollar started strengthening again. So quite some worries in Asia. And you can see us actually recovering or going against the tide happily. So we're back above 6,600. We were opening down in the red earlier this morning at 6,500 levels, but we're now up by 0.5%. So some positive news there. I did want to check in on which ones are bringing that up, and you can see the year to date here, but let me pull out the 1-day chart for you. So we can see which ones, and it's really the semi-rara up by 3 8/10%. Still on that, I did want to check in on DMCI. This, as they did mention that their coal output will be around 16 million metric tons in 2023. They did mention that they are expected to perform strongly next year, even with the rising costs and higher interest rates, Jess. So again, DMCI, of course, the big owner of Semi-Rara here, going the opposite way, however, of the best performer, trading at 9 pesos and 99 centavos.
And then maybe a quick check here on San Miguel after, of course, the president himself asking the CA to reconsider the TRO and that deal between SMC and Meralco.
Yeah, so this is the deal between Meralco saying you need to honor the contracts, SMC saying, wait a second, there have been difficulties in us with the commodities here, still on the energy front. Let's take a quick peek at San Miguel here, actually down this morning on the pronouncements of the president, with the possibility that this TRO might be reconsidered. So this, that the implementation of the SRAs with Meralco might come instead of being delayed 60 days. So a bit of pain there. Let's take a look at Meralco, which of course will have possibly the contracts honored, and you can see that up by 1 peso and 40 centavos, up by 0.5% to 286 pesos. Very interesting developments there, Jess.
And that's it for today, November 28, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.